Ladies and gentlemen, welcome to another episode of the Well Off Podcast. I'm George Masri, and today I interviewed Cliff Ford, who is a sales rep with Skyview Realty. So for those that don't know, Skyview, they basically specialize in multi-unit sales. They've been around since the 80s, so it's been quite a while. And based on what Cliff was telling me, it's all they do. They don't do any residential or single-family homes or condos or anything like that. Cliff and I had a chance to talk about a lot of different things, especially given that, with COVID and all that, some of the challenges that they've had with either finding properties or maybe even dealing with some of the tenants. And we did talk about payment plans and making sure to constantly reach out to your tenants to make sure that you're identifying any problems that might occur ahead of time. We talked about vendor takebacks and some of the terms that they've been able to work out lately with that, and especially vendor takebacks in second position, what kind of rates they're typically seeing right now. We also talked about the demand for multi-unit properties right now, and one example was a 41-unit building that they recently sold that had 14 offers on it. So that's pretty crazy when you think about it. Obviously, 41 units isn't going to be cheap, and to get 14 offers on it is pretty intense. So it's pretty interesting to see where the market's headed. If you are interested in multi-units, this is a great episode for you to check out. And if you have any questions, you can always contact me. I'd love to chat with you about small multis. I work typically on 4 to 6 unit buildings, and we're looking at Welland, St. Catharines, and Hamilton. So if you're interested in those markets, you could reach out by going to welloff.ca, and you can book a call there. And also you can download some free reports, welloff.ca/report. So there you go. Enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. Today, I'm here with Cliff Ford, who is a sales rep with Skyview Realty. And for those that don't know, Skyview is a brokerage that specializes in the sale of multi-unit residential buildings throughout Ontario exclusively. And Cliff has been involved in the sale of over 200 apartment buildings. So he's obviously an expert in that field. So I look forward to picking your brain today, Cliff. Thank you for joining.
Thanks for having me.
Yeah, so I like to start off by asking you about your childhood. You want to tell me a little bit about where you grew up and one or two things you remember from back then?
Sure. Yeah, that's a great question. I actually grew up for a good portion of my childhood overseas. I actually lived in Haiti for a few years, and so I got a chance to see different parts of the world. And then I was born in Toronto. We moved back to Toronto after Haiti, and I've been in the Toronto area ever since.
Cool. Does that mean you speak French?
I do a little bit. I used to speak, actually down there, it was sort of a half French, half Latin, half English version called Creole. Yeah. And I used to speak that as a kid. I think I've lost it since then.
Yeah. All right, cool. Okay, so let's talk about some multi-units here. I love talking about multi-units. That's a space that I'm interested in as well. Mm-hmm. So first of all, just out of curiosity, because I've personally actually never heard of Skyview until now, but I know you guys have been around for a long time, and the founder, you were saying, started off basically just dealing exclusively with multi-units. So do you want to tell us a little bit about Skyview?
Yeah, for sure. So our founder, Danny, in the early 80s, when he got out of university, he quickly realized that, the field that he was going into for education and training was not the one that he wanted to spend the rest of his life doing. And he had a passion from childhood to basically own apartment buildings. He used to tell his parents growing up that that's what he was going to do. And so coming out of university, he started by buying first a triplex, and then sold that, and it started getting bigger and bigger and bigger. And then, that passion for that multi-res field drew him to open up his own brokerage. And so he founded Skyview Realty in 1989. And for the last 30 years, that's all we've done is focused on the multi-residential field here in Ontario.
Cool. So what markets are you guys in? Are you going up to like Sudbury and Timmins and stuff like that? Or are you sticking to a certain radius of Toronto?
For the majority of the years that I've been there, we've basically focused on Southern Ontario. So pretty much anywhere from Orillia south down out to Windsor and out to Kingston. But in recent months, we've started to explore looking into the northern area. So we've been dealing with some sales in Sault Ste. Marie as an example. and that's been just a new foray for us to explore those markets as well.
Cool. Sounds good. Okay, so let's get into the details here. What kind of multis are you guys looking for? Is it first of all, obviously you're a sales rep, so you work with your
That's right.
clients, but does Skyview also do some kind of like purchasing for their own for yourselves and that type of thing?
Yeah, actually, that's something that not everyone necessarily knows about Skyview is that not only do we broker and sell these properties, we've also been fortunate enough to purchase a number of properties for ourselves over the years. And so we've got a management division. And what we find is that becomes a significant benefit to our clients because not only are we selling these types of properties, but we also understand them. So we understand the financial details behind it, the level of due diligence detail that goes into these types of transactions, and having that management part of our sort of wing of our company allows us to tap into the experts of our property managers or our acquisitions teams.
Cool. So, what have been some of the challenges that you faced in the multi-res space in recent months?
Obviously, the pandemic had an impact on our business. When everything first started to shut down last March, we were a little concerned. We thought we were going to have some troubled times ahead with our portfolio and with dealing with the sales. And certainly we saw, in the first month of after the stay-at-home orders went out, the industry kind of took a pause. Everybody just put everything on pause to see what was going to happen with the economy, to see what would happen with our tenant base and paying rents. But I would say industry-wide, and certainly for us at Skyview, we were pleasantly surprised that the measures that the government put into place with financial aid and the rules and regulations they put in there for safety, all those things worked to basically give us a pretty healthy outlook, despite the fact that the pandemic had such a great impact.
Right. Okay. Definitely, there was some uncertainty when the pandemic first hit, and let's say in the last 6 months or so, obviously things have developed since then. Have you guys seen any challenges when it comes to finding properties or dealing with the existing ones that you own?
We're not really finding any challenges in running our operations in our buildings. We've taken a very proactive approach with all of our tenants. So on a monthly basis, we have somebody in our office contacting every tenant that we know may have trouble financially, and working out payment plans and doing what we can to assist them through this time. And we found that being proactive with our tenant base allowed us to anticipate problems ahead of time and to adjust as needed. And obviously, it's helped our tenants, survive through this as well, knowing that they've got a management team that is working with them, not against them.
Sure.
In the overall market, though, the biggest issue that I'm seeing these days is there's just so much demand out there for these types of properties, which is obviously a good thing for myself as a salesperson. And, the minute I bring a property to market, I'll have 10 or 15 people instantly, interested in pursuing that property. And by the time it sort of goes through our marketing means and flows, you can have hundreds of people responding on any given property, no matter what size or location. There's just such a great demand for this type of real estate right now.
Yeah, absolutely. I know a couple of colleagues of mine have recently sold their buildings, and these were like in the 20 to 25 units, and they were getting multiple offers on their buildings. Are you seeing something similar in Toronto? I don't know if like you're selling mostly in Toronto, but are you seeing multiple offers on larger buildings that are in the $5 to $10 million range?
Yeah, absolutely. Almost every one of our properties that have come to market in the last few months has had multiple offers. And a classic example of that, we sold a 41 unit building on the Hamilton Mountain a few months ago. And we had 14 offers come in.
Wow.
On the deadline for that property. We see multiple offers all the time, even on some of these properties that are off-market opportunities where the seller says, I don't want it publicly marketed, but bring me an offer or bring me a few offers. we generate a few offers right away just because there's so much demand and we know all the buyers and sellers in this marketplace.
Sure. And what are you guys doing? Speaking of off-market opportunities, what are you guys doing as a team to generate these types of opportunities for your clients?
Yeah, because apartment buildings are the only class of real estate that we focus on. We've done well over the years in tracking who's in the market and who's coming in brand new into the market, who are sellers, who are buyers. We also keep notes on buying protocols and priorities for some of our buyers in terms of what size or location they're looking for. So when we get an opportunity from an off-market property, and most of the time those off-market properties come because a seller is concerned that they don't want to be putting it out on MLS, or they don't want it to go out publicly on our website because they're afraid of tenants finding out or people just unsolicitedly showing up to their buildings.
Yeah.
So they'll often tell us, keep it quiet, just bring me one buyer or a few small buyers, and we can get the deal done that way.
Cool. So I think from the perspective of someone who is looking for off-market opportunities, it would be beneficial for them to contact you potentially and say, hey, this is what I'm looking for. I'm qualified. I'm ready to go. If you come across an off-market opportunity, I'm your guy or your girl. Give me a call. Yeah.
That's right. Yeah. Yeah. And it's really just making that initial introduction. If I get an email or a phone call from somebody who's looking to invest in apartment buildings, I will generally write down exactly what they've told me in terms of their buying preferences and locations, how much they've got ready to invest. And I will make notes of those so that when I come across those opportunities, I can look down my list and say, okay, here's the 3 or 4 people that I know are ready to act on it.
Yeah. And is your team proactively looking for off-market opportunities, or are you guys just waiting for them to come to you in some ways?
I would say from our perspective, our preference is to not do an off-market opportunity, because we find that if we expose it to our database and we put it out through our marketing strategy, we can easily find the best and right fit buyer for a property by casting that net to all of the industry, if you will. So that's usually our preference. Now, what happens is you start talking with a seller and you find out that they don't want it to go out and be marketed, and that's when it becomes an off-market opportunity. So we keep those in hand to bring to people that we know will work with them.
Sure. No, I totally understand that. So you're saying you would prefer, for the seller's sake, to go on the market because you'll attract more eyeballs and potentially get a better price. But what I'm asking is more so, I know you're not looking for necessarily for off-market opportunities, but sometimes if the supply is low, you might have to create your own inventory. So are you doing that? Are you doing anything proactively in those situations to find off-market deals, or do you guys just let them come to you?
Part of them does just come to us because we've been around for 30 years, and a lot of the owners in Ontario are familiar with who we are, and they've worked with us at one point or another. But we also have members on our team that are dedicated to just doing research and tracking sales in the Ontario market. We also have team members that they exclusively go through our database and contact people in our industry looking for those who may be potentially selling in the near future.
So are these cold calls, or are they more so just people that you guys have come across over the years that have expressed some interest in selling, and then you guys are just kind of following up from time to time?
A little bit of both. I find that when it comes to Skyview, because, like I said, because we've been around for 30 years and people know the name out there, it's not really a cold call, because at one point or another, these owners have dealt with us, whether they were inquiring on another property we were selling previously, or they've either bought or sold with us before. So we do get a lot of repeat business from clients, but we also do the cold calling in the sense of calling those people that we may not have already talked to and just introducing ourselves and telling them what we can do for them when the time's right.
Sure. Okay. Yeah, I was just browsing the website, and just a couple things that I came across here. I saw that your database has over 11,500 owners and investors. and you
That's
guys
right.
have a large list of properties in Ontario. So do you have some sort of tips or tricks on how you guys were able to gather that information? Was there like a certain software that you used or anything like that?
No, not really use any software. I mean, we do have a database that we had developed for ourselves, which is basically just a client portal, and it allows us to keep their contact information and link them to which buildings they own. So I think really the trick of it is time. We just spend time over the years constantly researching and building that database. And so it's a matter of just making sure that you're introducing yourself to people and knowing the people in the industry. And obviously, during the pandemic, a lot of this has to be virtual. But when things open up again, one of the best things you can do for any investor in there is just to start networking. Be out there. There's a lot of trade organizations, landlord associations that host regular events, and that's a great place for an investor to start getting connected into that network.
Yeah, absolutely. Another thing on the website was that you guys talk about properties with environmental deficiencies, structural issues, work orders, stuff like that. So can you tell us a little bit about what you guys do in the situation where you might find an opportunity with some of these problems mentioned?
Yeah, so we've had a few properties over the years that have had different issues. What we've found is that when it's an easy sale, it's a turnkey type of property. Anybody out there can sell those. The minute you've got a listing on it, you're going to find yourself a buyer and you're going to be able to get that deal done. What we find is that the difficult ones are the ones that often come our way because we're very tapped into the industry experts out there. The unfortunate thing is with a lot of real estate agents, they just want to put the listing out there and have somebody else do the work, and then they get their commission check. How we approach it is a little bit different. We look at holding the hands of both the buyer and seller through the entire transaction. The majority of our deals are done as exclusive listings, and so we represent both the buyer and the seller throughout the process. And we partner with industry experts, the engineers, the lawyers, the lenders, and we have a great relationship with all those individuals so that at every stage of the real estate transaction, we're able to bring in the experts for that particular area. Sure. One that comes to mind as an example was in North York on Finch. We had I think it was a 32-unit building. When we went through the sales process, it turned out that there may be an underground oil tank in the parking lot. And so obviously that changes not only the timing of the transaction, but the costs associated with that transaction. Obviously, you have to look and see, is there contamination in the ground from that oil tank? In that particular case, not only was there an underground storage tank under the parking lot, so now the parking lot had to be pulled up, but there was also contamination in the soil, which needed to be remediated. And so that took that transaction, which may have been done in 2 months. It took about 5 or 6 months to get done. And we had to work with engineers at each stage. So obviously any problem can be overcome in a real estate transaction, but it's about knowing the experts and having the patience and understanding of what it's going to take to get to the finish line.
Yeah, for sure. So if we go back to that example, do you remember what the procedure was like? I know you kind of touched on it, but did they have to dig up the entire parking lot and maybe part of the lot as well and replace that soil?
Yeah. So they end up, once we did the phase 2 environmental study and discovered, yes, there was an underground storage tank. I think about 80% of the parking lot had to be dug up in order for them to not only remove the tank, but also to be able to excavate the soil that it had been leaked into around that area. So obviously, not only are we now having to deal with the buyer and seller expectations and their, expectations of what was going to happen with the process, but now we had to also coordinate with tenants. For example, a good majority of them would not have parking spaces for a couple of months while this was happening. So we got involved at every aspect of those stages.
And do you know why it's important to get rid of that oil tank and to replace the soil? Like if it's been operating that way for dozens of years, like just having
Mhm.
been through that experience, do you know why it's mandatory to replace the oil tank and the soil, I should say?
Yeah, certainly you have to follow the environmental laws. The biggest impact that it has on an owner from an ownership perspective is obviously lenders are not willing to give a regular mortgage
Yeah.
to a property that has contamination and is not compliant with environmental laws. So for the buyer picking up that property, if he wanted to have a proper mortgage and really leverage his investment dollars, he had to make sure that it was properly cleaned up as well.
Okay. Yeah, that
And
sounds, yeah.
that's something that we advise all of our clients. Um, if you're going in and you're purchasing an apartment building, even if you're not getting financing, for example, if a vendor take back mortgage was in place,
Hmm.
and you didn't need to go to an official lender, our advice is always still go and get an environmental test done and get that report in hand to know that you're covered, because you don't want that liability cropping up, 5 years down the
Yeah.
road when you go to get your formal financing.
Oh, definitely. Yeah. And speaking of VTBs, so what's been your experience in the last year or so with VTBs? Are you finding that you guys have been able to secure them on certain properties, or is it a little bit more difficult because of the lack of supply and the ease of which people are able to sell their properties at this time?
So I would say that, in about half of the transactions that we've done in the last 6 months to a year, I would say half of them, there was some form of vendor take back financing involved. And most of the time, that's in second position. What we find is that sellers will be open to a vendor take back mortgage if they're getting the rest of their terms. So if they're getting the price that they were expecting, oftentimes that price, because of the market interest and the amount of interest in these properties, you're paying a bit of a premium, especially in places like Toronto or the surrounding GTA area. You're paying a premium in terms of the price you're paying for these buildings.
Mhm.
And lenders still have their strict criteria in terms of what they will lend on these properties. So that difference between the purchase price and the mortgage balance is sometimes significant, that a vendor take back mortgage allows a person to purchase the property at that price, but still get their money leveraged properly.
Sure. Uh,
Mhm.
so you mentioned that these VTBs are in second position. What are some of the rates that you're seeing on these? I know it depends on the amount and all of that, but maybe if you could just give us kind of like some general figures that you've been seeing in the last year or so.
Yeah, I would say on average, those VTB mortgages are getting about 3% interest only. That's sort of the average we've been seeing lately. Um, and I would say that that's been a trend for maybe the last decade. Floating anywhere between 3% and 4%.
Okay.
What we have found in some of the buildings that we've sold, if there was a repositioning that was needed for the property for whatever reason, it was run down or they had a bad tenant profile. A lot of times the buyer needs a bit of time to reposition the property and really take over and
Yeah.
institute their own principles and how they're going to run the property. And so the VTB mortgages in those cases sometimes will become scaled. So they might start off with the first year being 0%. So that allows the cash flow to be there for this person, the new buyer, to take over and start running the property. And then in the first and second year, they would start to incrementally increase, and finish around the 4% in the final year of that term. So sometimes there is a scale to the VTB, but on average, I would say we're seeing about 3% to be the going rate on those second mortgages.
Okay. And what about the amount? Is it usually like a smaller amount that you're getting a second position VTB on? Is it like 5% of the purchase price, 10%, or are we talking about 30 or 40% of the purchase price?
I would say, just sort of as an average rule
Yeah.
of thumb, it usually ends up being about 10%
Okay.
of the purchase price. And the reason for that is, especially, like I said, in the GTA and larger markets throughout Ontario, you know, based on lending values and the purchase prices, you're getting a buyer that's coming in with, say, 40% down to their first mortgage.
Yeah.
Well, most buyers don't want to leverage that amount of money when they're purchasing a property. So that extra 10% on the VTB, now all of a sudden they're only having to put in 30% instead of 40%. So that's how that happens.
Yeah. And so you guys find that the sellers that you're working with are okay with only earning 3 or 4% as a second position mortgage typically?
Yeah, because they're getting the other terms that are important to them, whether that's the closing date they want or the purchase price.
Sure.
They're usually okay with, they're not looking to get wealthy off of the vendor take back mortgage. Really, the benefit to the seller is that they're delaying their capital gains on that portion of that fund. So definitely, that's really the benefit to them, and the reasons why they will often entertain a vendor take back mortgage. I've sold a couple of properties in the last year where an owner was retiring, and in those cases, he was actually able to do a full first mortgage as a vendor take-back mortgage because he was just trying to defer as many capital gains as possible for the next 5 years.
Sure.
And by offering a first mortgage, again, it wasn't about the interest rate, but it was about what he could get to facilitate the deal.
Yeah, it makes sense. Like in that example, perhaps he had, say, 10 buildings, and maybe he did a building like for the next 10 years. Each one will the VTB will mature at that point so that he can sell them off slowly and not have to pay capital gains on the entire amount.
Exactly. Yeah. He's staggering when he has to pay the tax man. Yeah.
Yeah, exactly. Okay. In terms of the properties that you or your clients are buying or whatnot, what are some of the value adds that you guys are looking for today to maybe potentially refinance it soon after or whatnot?
Yeah, certainly. The biggest one out there, and this has been the case for years now, but even more so prevalent in the last year or two, upside in rent is certainly the number one value add. We will look at a property and we'll analyze each unit in terms of what the market could bear on a rental figure. And we'll analyze that and put that into a report for our buyer to say, here's your snapshot of what you can achieve as you move those tenants out. Now, some of the buyers that we work with, they go in and they're aggressive. They'll do the cash for keys type of approach where they'll buy out tenants. But the majority of the buyers that we deal with, they take it more as a natural effect. As people move out, they know what that upside is, and they can buy and hold for a number of years until they've turned over those units.
Yeah, because typically when buyers or when somebody's purchasing a 40-unit building or whatnot, the building's already typically cash flow positive right from the start, so they're not feeling the pressure of having to replace those tenants. Otherwise, like, I don't think you can get financing or whatnot. So it makes sense that you would be patient and just wait for that natural thing to happen.
Yeah. And there's other upside, outside of just the rents. A lot of the owners these days are looking at utility consumptions. How can they cut back on their hydro, water, heating costs by investing some dollars into the property to do a toilet replacement program or convert all the lighting to LED. Investing in high efficiency boiler systems for larger buildings. That's all trying to capitalize on the upside in their utility consumptions. Some of the other things we look for extra space in a building. A lot of times this older stock of apartment buildings have ground floor space that was just never used, or maybe at one point it was used for storage lockers and the tenants just don't use it anymore. So we look at that and we say, could something be done there to add an additional unit? All of a sudden you're going from a 40 unit building to a 41 or 42 unit building for a fraction of the cost that it takes to build those.
Oh yeah, definitely. So you were touching on the utilities. Do you guys look for opportunities to separate the meters? I know older buildings, sometimes you can't, it's very difficult to separate gas meters or maybe water meters or whatnot. Hydro is usually the easiest one to do, but do you guys look for those opportunities, or do you typically just leave the gas and water?
No, we do look for those opportunities. Certainly there's a benefit, in terms of your purchase price, if you're doing those types of efficiencies. I sold a building in Oshawa back in October, and that particular one, the owner had bought the property 2 years prior, and that's exactly what he did. He went in there and he converted all the utilities over to smart metering. In this case, it was electrically heated, so he had no gas in the building, so it was just hydro and water that were smart metered. But that turned around for him to have a significant increase in his net operating income when he converted that over. Mm-hmm. And that's why within 2 years he was able to go out and sell it for a significantly higher amount.
Yeah. So when you say smart meter, is that one of those like electronic boxes that gets installed, and then basically the utilities are controlled by the company that installs the smart meter box?
That's right. Yeah.
Yeah.
Yeah. Cool. So, when it comes to hydro, you can do the individual hydro meters, and I'm sure you've seen those. That requires a significant amount of space. If you don't already have that space in a hydro room, it may not be feasible. But the smart metering allows, to get the exact same effect, but with a smaller footprint of equipment.
Sure. Yeah. And there are some benefits too, like, I know it could take, there's a procedure involved with getting hydrometers installed. I think sometimes even they have to verify that the street has enough service to service the additional meters. Right. Whereas the smart meters, you don't have to go through that entire process. So it's pretty cool.
And depending on the size of your building, those smart meters can also be a revenue generator, because some of these companies will actually give you incentives and provide you with an income source for what they collect from the tenants.
Cool. Yeah, that's awesome. So we touched on VTBs, we touched on value add opportunities and your database and all that stuff. Now, if we wanted to talk about some maybe like coin op machines and all that, we haven't touched on those. Is that something that you guys will always install in your buildings, or is that a case by case basis?
We will always put in laundry machines in any buildings that we have. We do find that it is a consistent income generation. It's not significant, obviously, in comparison to your rental income. Yeah. But obviously, when you're looking at the value of these rental properties, every dollar that you can gain is going to give you significant dollars in return. And so we look for any opportunity, and certainly laundry is one of the obvious choices to bring in. Now, I would say we're sort of split between buildings that have laundry that's owned and it's coin operated. So we have people actually having to go and collect coins at these properties. And then we have some buildings where it's on contract with a company, for example, Coinomatic, where they take care of all the maintenance and they take care of all the payment processing. And then they just give us a portion of that every month. Yeah, so it really depends. We find that the larger buildings work well with a contract basis for laundry, whereas our smaller ones, it's nice having those coin operated ones, because you've got some coins to collect, and you've got a little free cash flow that way.
Yeah, definitely. Have you guys had any experiences with electronic collection for coin operated machines as opposed to like physical coins? When you work with some of these laundry companies, Phelps, Coinomatic, whoever it may be, they often have the card readers where tenants can load up funds from their bank account onto their card, and then just use the card. That really works well for larger buildings. Any of our buildings that are sort of 80 units and above, we will put in the full card system, because when you've got 7, 8, 10 laundry machines there, you don't want to necessarily be collecting coins to that amount. And obviously there's liability there that it's something that could be stolen. Sure. Whereas they can't steal an electronic card. Oh yeah, definitely. Yeah. Okay. That's great. Is there anything else that we missed or that we didn't touch on that would be important to share about maybe some of your procedures or some of the successes you've had with multi-units?
My advice to anybody who's getting into investing in apartment buildings, my focus is always on doing proper due diligence. So you can never ask too many questions. You can never dig deep enough or too deep for finding information about the property. From us at Skyview, what we try to do is answer every particular question that could arise on a building right from the beginning. So we'll collect documents and we'll scan everything into a package that's available for the purchaser. So at the end of the day, they know exactly what it is that they're buying and what they're getting their money worth for.
Definitely. And on that note, with the due diligence, so assuming that, I don't know, let's say you have a 40-unit building, you might have maybe one or two tenants or whatnot that are not paying their rent, that are taking advantage of the landlord tenant board freeze, eviction ban and whatnot. Is that something that if you are representing a buyer and you want to make sure they're protected, how are you ensuring that you're finding out about these sort of cases before moving forward?
So that's one thing that Skyview does and has done for years. We get right at the outset when an agreement is drafted up, we describe exactly what needs to be delivered from the seller to the buyer and vice versa, and it's all laid out right in our agreement of purchase and sale. And one of those items is what we call the tenant status report, and it's a spreadsheet that looks at a snapshot of all the tenants, when they moved in, when their increased dates are due, if they've got any arrears, and for how long. And that one document gets updated throughout the sales process, so that, because sometimes these deals will take 3, 4, 5 months from start to finish, and a lot can happen with tenants during that time. So doing that tenant status report at the beginning with the agreement, and then at the end of due diligence period and just before closing, allows us to track and disclose to the buyer exactly what they're getting.
Awesome. That's cool. Does the tenant usually sign that document, like fill in their information and sign the document, or is that exclusively done by the seller?
This particular one is done by the seller. It's sort of their declaration of what the tenants are like.
Yep.
What we will do just before closing, usually about a week or two before closing, is we'll go and get tenant acknowledgements done, and that's where the tenants are actually verifying what they pay, how long they've lived there, what parking spots they have, if they pay for their own hydro or water or whatever. All that gets done on a tenant acknowledgement. So if on closing, let's say, for example, you've got an owner, he only has 35 out of the 40 units he actually has leases for because they're older tenants, or maybe he didn't get them when he bought the property. Those tenant acknowledgements work as sort of a replacement for a formal lease to understand the terms.
Yeah, absolutely. Yeah. Okay, perfect, Cliff. I appreciate you sharing that. We're going to jump into the next section, which is the random 5.
All right.
So I'm going to ask you 5 random questions, and you just tell me the first thing that comes to mind.
Sounds good.
All right. Number 1, if you had to change your name, what would your new name be?
I think I would go with something like DJ, or, something like that, it's initials rather than name,
Oh yeah. Cool.
Yeah.
Okay.
Yeah. I used to DJ back in the day, so maybe that's why too.
Nice. I used to DJ too. That's funny.
Yeah.
Number 2, why do we dream?
I think humans were built as storytellers and creators, and I think it's our mind's way of telling a story to entertain us when we're turned off for rest and relaxation.
Cool.
Yeah,
I like that. Okay, 3. When was the last time you acted nonchalant but were going crazy inside?
I think that's almost every day.
Yeah.
As this lockdown goes on, I feel like, we're all just sort of doing what we can to act like everything's good.
Yeah.
But we're all getting a little stir crazy at the same time.
Oh yeah, definitely. Number 4, what song do you have to sing along with when you hear it?
Oh, wow. That's a great question. I've got an entire playlist of about 25 songs that I call my go-to karaoke list. And so if I'm driving in the car, I'll put on that playlist and just put it on random and sing the entire time.
Okay, there you go. 25 songs, not just one for you.
Oh no. Yeah. I love singing. So
yeah. Number 5, what success principle do you live by?
I think the most important thing to me is having integrity. I think whatever you're doing in life, and in my case, I chose to enter the multi-residential field. No matter what you do, if you're doing it with integrity and you're true to yourself, and how you treat others is done with integrity, you'll succeed in whatever you put your mind to.
Yeah, absolutely. Yeah. Perfect, Cliff. I like everything you've shared today. I want to ask you, how do people reach you and what services do you provide?
Yeah, absolutely. People can reach out to me by email at cliff@skyviewrealty.com. They're also welcome to visit our website to learn more about us and see properties that we have available at skyviewrealty.com. They're also welcome to reach out to me in my cell number, 416-277-4637. Anybody who's interested in getting into this particular field, whether it's as a buyer or as a salesperson, I'm always happy to discuss the industry with them. And certainly if they're looking to purchase properties, I can put them on my distribution list so that they see, as properties become available, they get an alert right away.
Awesome. Yeah. Great, Cliff. Thank you again for your time and for sharing all this stuff. And I hope you'll enjoy the rest of your day.
Thank you so much. It was great speaking with you.
All right. Take care.
All right. Bye-bye.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.